Hi there, you're with NDTV Profit. After the Reserve Bank of India, market regulator SEBI has cracked down on the JM Financial Group. Just 2 days ago, the banking regulator had directed JM Financial Products to stop any form of financing against shares and debentures with immediate effect. Now, SEBI has passed an interim order against JM Financial, the merchant banking entity, barring it from acting as the lead manager for any public debt issue. Now, before I come to the alleged wrongdoing that SEBI has pointed out in its order, I want to go to the specific regulations under which the SEBI order has been passed, and that is the NCD regulations. In short, SEBI has alleged that JM Financial, along with its group entities, gave an assured exit to certain investors at a profit. The NCT regulations prohibit payment of any incentive for making an application, but according to SEBI, JM Financial allegedly violated this very provision. I'm joined by my colleagues Sajeet Manghat and Vishwanath Nair to discuss the SEBI order and the coordinated action of the markets and banking regulator. Sajeet, Vishwanath, thank you for joining me here. Sajeet, before we come to the details and the nuts and bolts of the SEBI order, do you want to hazard a guess on which specific NCD listing, SEBI is alluding to? Because SEBI, maybe for the right reasons, has not named the company in its order.
So JM has been very active in many of the debt issuances, but as per the data which we have seen, this seems to be the Piramal NCD which is in question here, because that's the only NCD which is open between October 19th and the close on October 30th. Now, it is most likely this is the NCD in question, where SEBI has investigated the investments that went into the NCDs and subsequent the transactions undertaken by JM Financials product and JM Financials broking, as well as the merchant banking, because all three entities were involved in the sale and marketing of this entity. Along with, there were other bankers as well, Nuvama Trust, AK Capital. There are four merchant bankers, and all these four merchant bankers were it seems Piramal NCD which was in play at that time.
Okay, so this is, of course, that you have just gleaned into from a quick dive into SEBI's data. SEBI has not named it, so we'll not belabor on it any longer. But I do want to come to what the regulator has said in this ex parte interim order. Remember, JM Financial will now get an opportunity to present its case, and based on the evidence, the regulator will pass a final order, which then will, I suppose, go through the regular appellate process. Now, SEBI has said that the manner in which subscriptions in this particular NCD listing and issuance was managed was shocking. It has said that the scheme involved getting individual investors to make applications, and investors were not only provided funds, but also assured an exit at a profit on the listing day. Transactions, SEBI says, at every stage appear to have been predetermined and premeditated. Sajeet, you want to take us through the steps that SEBI has laid out and where exactly it has found the alleged manipulation?
It all starts from the subscription part of it. It seems from what SEBI has, articulated in its ex parte interim order, that, JM Financial's product, which is an NBFC, had lent to certain investors, and then they had an arrangement wherein they bought back those NCDs at a loss, and subsequently they sold it to corporate bodies later on. In the whole process, the subscription of the NCDs has happened. There is a list of clients who are not eligible or didn't have that kind of money to buy these kind of NCDs, but they were financed at 10% interest rate, while the NCD cost or the interest borne by the NCDs were at max 9.35% or so. So it is basically you created an artificial market or artificial demand for the NCD by funding clients who participated in it, and then there was an exit provided to them at a profit, so that they earned between 1,500 to 2,000 rupees per subscription, and it seems that that was a fee that was given to them, and in the process. What SEBI has said is that they have gone ahead and resold the entire thing to other corporate bodies.
Okay, Sajeet, also take us through, because these are, I'm guessing, individual investors not known to each other, right? SEBI has also mentioned that the moment investors who applied through JM Financial, the broker, it was submitted by JM Financial, the merchant banking entity, and this broker, whenever this broker required funding for subscribing to securities in a public issue, these clients were then referred to JM Financial NBFC. Can you take us through the steps that SEBI has detailed?
It seems that the clients this is as per the order which has been brought up by SEBI, that JM has submitted to SEBI that the entire role of the broker is to pass on the clients to JM Financial NBFC, so that they can finance the public issue, and that and it's as per SEBI or the reply which has been given by JM to SEBI, the broker only had given them the references to the NBFC so that it can be financed, and thereafter the broker has subscribed to the to the NBS to the NCD, because all clients, it seems there is there's a pattern which has been brought in by which SEBI is showing in its order, saying that all of them got money at the same time, then all of them subscribed at the same time, and then all of them exited at the same time, and that is something which SEBI is pointing out in his order, saying that it is something very suspicious, and it and while it is just an interim order, it's SEBI suspecting that there is going to be a further investigation into the functioning of this entire market, because that's how it seems that many of the subscriptions are going through in the market, not just for JM, but we have been talking about how some of the small issues are getting 100 times subscribed or 200 times subscribed, and this is what seems the pattern is.
And it seems that SEBI is alarmed at the significant quote-unquote pop-in price of the security on the listing day, because it says that while it's common for equity IPOs to see premium, for NCDs it's usually not the norm, and typically investors hold such instruments to maturity, and the large number of investors exiting these NCDs on the day of listing is unusual. Where did it all start from, Vishy, coming here? Do you think it is first the RBI that noticed the anomalies in JM Financial products, and then led SEBI to sort of dive into the actions of other entities?
Yeah. So we know that a couple of days ago, JM Financial Products received this order from the Reserve Bank of India, where they talked about certain discrepancies in the way, or lapses in the way that they were doing the IPO financing and the debenture financing business. Now, JM Financial Products is the NBFC arm of the JM Financial Group. Having said that, RBI mentioned in its statement that it started its action after SEBI highlighted the problem to RBI. So this seems like a bit of a coordinated sort of action between the two regulators. With respect to what RBI did with JM Financial Products, what it saw notices is linked to what SEBI has detailed in its order today, which is that JM Financial Products was lending money to certain people, taking a power of attorney from them to operate their trading accounts, and then essentially dealing with these securities. So in that manner, it was acting as a lender as well as a borrower, because whatever that money led to, whatever they were purchasing, was entirely being done by JM Financial Products. So that NBFC element, the RBI has handled. We have seen this action on at least on the debt issuances side of the business for JM Financial. As Sajeet was pointing out earlier, there is likely going to be more action on the equity listing on the IPO market as well. Let's take a deeper look into what exactly is happening here, because SEBI and RBI have sort of coordinated back in December as well, when they came out with an order against AIFs, bank investment in certain AIFs who were in exchange lending to borrower companies. That action as well was largely because SEBI was highlighting this problem for a while to the RBI, and then finally the RBI acted. And this seems to now being percolated to entity-specific action as well, where they're coming after JM Financial Products because of the lapses that they have reported. Payaswini.
Sure. We're going to take a quick break here and come back to what JM Financial, and it's probably the initial responses that it gave to SEBI, said in its defense. We'll be right back after a quick break. Welcome back. We're discussing market regulator SEBI's interim order against JM Financial. I do want to point out what JM Financial said to SEBI in perhaps its initial responses. They've said that that all the entities put together have complied with the letter of the law. But SEBI has countered in its order to say that while it seems like everybody has benefited, the company who was issuing these entities, the investors who were subscribing to it, JM Financial, the merchant banking entity and its group entities. But once you start seeing these transactions, as individual steps, you will figure out how all this got manipulated. Sajeet, it is, since we've had the new SEBI chairman, she's been repeatedly saying that we're not just going to pull market participants for violation of the letter of the law, but also the spirit of the law. This order seems to be in line with that message. You wrote a couple of days ago, on this very issue. How sort of solid do you think here the argument is? Because it seems like everybody in the ecosystem, it was a win-win for everybody. There was no complainant at the end of it, given that the investors also made a cool profit on an instrument which they would have typically held for a longer maturity, but to get a profitable exit on the listing day, which investor won't be happy?
My sense is that there was a regulatory arbitrage which is available, because all regulators were in silos, working for their own product, or as I say, segments of the financial markets. The moment you integrate the markets, you bring in multiple agencies who are governing various things, it just shows up that there is some lacuna which is there in the system. Because you may be right from the SEBI's point of view, but from the banking point of view, you are wrong. And then if you look at some of the SEBI's arguments which have been made here, saying that incentives have been provided for NCDs, which is not allowed. So you have to interlink multiple regulations and multiple regulators' rules and regulations to see whether there is a violation or not. Because if you look at in silos, it may not look as a violation. But when you bring in everything together, you find that there is issues with respect to the way IPOs are getting marketed, the way it is getting funded, the way it is getting our exits have been given, and the way again it's getting resold. So our artificial market is getting created, and this is something which SEBI has been trying to grapple with for a long time, because it has always been the case of SEBI saying that retail investors should buy from the secondary market, they should not buy from the primary market, let the price settle, and then you go and invest in the secondary market. But what happens is that because of the kind of oversubscription that comes in, there is a listing pop that gets created, and that's a greed that's luring all the retail investors into this market, and that's why they are. There is an attempt to ensure that either liquidity is curbed or these practices which have been created is curbed. Now, it is a common knowledge in the market that there are pool of investors, and with genuine PAN cards and genuine demat accounts and genuine bank accounts, all working in tandem to ensure that IPOs can get through, especially HNI HNI investments. But it is very difficult to prove unless you bring everything together, and I think this is happening for the first time, where you're getting concerted effort by multiple regulators coming together and making that effort.
Sure, and perhaps that is the necessity of the market currently. Vishy, I'll come to you very quickly on where the let's say RBI leg of the order is, where JM Financial has come out with a rather strong statement to say that we've not done anything wrong.
Yeah, so the statement that followed the RBI's press release was quite strong. They said that they have not noted any deficiencies in whatever they did. They've been following industry practices. They've been following regular sort of business practices. They seem to be saying that they're in the clear, and that they will engage with RBI on fixing whatever is worrying the regulator. But at this point in time, remember that the RBI has completely stopped this IPO financing and debt securities financing business for JM Financial products. They have said that we'll do a special audit, and then you'll have to rectify the problems. Another angle to this, and another way to look at this, is also the fact that debt securities are now the primary fodder for the NBFC as well as smaller lending industry, because the RBI has been raising concerns about excessive bank lending to these entities, and they have to end up borrowing from the debt securities market to continue providing the loans that they provide. And if there is going to be any kind of a negative impact of these orders on the debt securities market, then that puts NBFCs also under stress, because they will not be able to tap the only other source available to them, because overall there's a negative view in the market against such issuances.
Okay, we're running out of time. There's one thing quickly that, Sajeet, that I want to come to you with. In light of what SEBI and maybe RBI have found, do you anticipate that SEBI might at some point say, because here what they've repeatedly said in the interim order is, look, everything got managed within the JM chain. Is there a possibility for the regulator to say, because how many such cases SEBI is going to take enforcement action against? So typically we found regulators find a fix in the regulations to say that where, let's say, JM is the merchant banker, no funding can happen through a group entity. I mean, is there any sort of possibility of that happening?
I think there are multiple probes which have now been opened as per SEBI's interim order. If you look at the last page or second last page of SEBI's order, they made it very clear that there are multiple issues of public debt issuances which will be under investigation. They've also referred to the SME platform where they have seen a multiple subscriptions which are mind-boggling subscriptions which is there. So it's not just going to be, it's a probe which has just begun, and it will take I think a couple of weeks or months before SEBI can come out and bring in more bankers or something in the thing, because this is the very bad practice which is there in the market today. And SME is something which we've been also highlighting to the market regulator, saying that the kind of froth which is coming in with respect to our 20 crore issue gets 40,000-50,000 crores worth of demand from the market, and how it's getting, no one knows, and where the money coming from, no one knows. So this investigation is just starting. And JM being the first one, I don't know how many more will be there, but there are many players who are in the market who do a lot of marketing, and this kind of fraud will be dealt by the regulator as and when the regulator they bring in. I don't know what kind of regulation can come in. And there is enough regulation in place. It's a question of marketplace agreeing or following the spirit of the law, which the SEBI chairperson has been pushing. It's not the letter, but the spirit of the law that needs to be put in place, and that's what I think SEBI's action reflects.
Okay, all right. SEBI will sort of stay on top of such practices, obviously, and with RBI's help, I think the regulators' investigations will only solidify in weeks and months to come. Of course, JM Financial will present its case before the regulator, and perhaps at some point we might see some action before the Securities Appellate Tribunal as well. We'll obviously stay on top of this story. Thank you for joining us here on NDTV Profit. Have a good evening.